Learning objective number 4, prepare journal entries for a process costing system. Okay, we have a series of journal entries that are on the slides. We'll follow those journal entries, but I'm also going to flip over to a spreadsheet to show how those journal entries impact the accounting equation, which makes it kind of easier for us to understand how it's all working. So first slide says, during October, $140,000 of direct materials was requisitioned for use by the shaping department. So we have a debit to the work in process inventory, shaping, 140,000, and then the credit from raw materials inventory. We flip over to a spreadsheet here. Under assets, we have raw materials. And we just have to assume that we had purchased raw materials sometime before. So there's X amount of dollars in there already. And then this journal entry says, let's remove it from raw materials inventory and put it into work in process inventory, specifically shaping. So we're going to go ahead and create an account, work in process shaping. And in this case, we are debiting 140,000 into work in process and crediting 140,000 from raw materials inventory. Okay, so this records the requisitioning, the removal of $140,000 of direct materials out of the warehouse and into production, or specifically the shaping department. The next journal entry explains that labor time records show that $21,250 of direct labor was used in the shaping department during October. So the two accounts that are going to be impacted by this journal entry would be work in process inventory, shaping, $21,250. That's a debit, and then wages payable, that's going to be a credit. So the way that works, I'm going to go ahead and create a new account over here under liabilities called wages payable. By the way, I'll go ahead and reference this. Well, the first entry we'll call journal entry number 1. And the second journal entry we'll call number 2. It's going to be a debit to work in process shaping for $21,250. And then a credit to wages payable for the same amount. So we're seeing how we owe the $21,250 to the employees, and we're recognizing those costs as an increase to our inventory. Remember, work in process is a part of inventory. So work in process, and specifically the shaping department. Okay, moving on to the next journal entry. The shaping department's overhead rate is $50 per machine hour, and the department used 935 machine hours this month. So we're going to charge $50 times 935, which equals $46,750. This is going to be charged to the shaping departments for manufacturing overhead. Therefore, the debit is work in process shaping, $46,750, and the credit is going to be to manufacturing overhead. Okay, so we're going to go ahead and create a new account, which obviously had to have existed before. And the account's called manufacturing overhead. And now we also, in this case, have to assume that we had some actual costs, because when we actually pay for utilities, repairs and maintenance, rent for the facility, manufacturing facility, that there are debits going to manufacturing overhead. Once those debits are there, then now we have a basis where we use, and when those debits are there, we now have we have to use an allocation process an allocation computation to take the money out of manufacturing overhead and put it into the processes. So in this case, work in process is going to be debited for $46,750. We'll call this journal entry number 3. And we're going to credit manufacturing overhead. And so this allocation was computed just like we had learned back in job costing how to allocate overhead. So that process remains the same no matter whether it is job cost or process cost. The example here, we used machine hours for the allocation. We took the actual machine hours of 935 and multiplied by the allocation rate. All right, the next journal entry, number 4, says that CView determined that $176,000 should be assigned to the units completed and transferred out to the insertion department. So both of these are still in the work in process inventory section of the accounting system. But the difference is that now we're going to identify money going into the work in process inventory for insertion, and we're taking that money out of shaping. So this is the transfer from one department to the next. So this is going to be journal entry number 4. We're going to credit $176,000 from the work in process shaping, and we're going to debit the insertion department. We're going to debit it for $176,000. So you can see the money is just being moved from the shaping department and into the insertion department. $176,000 credited and debited here, going from one department. So everything that's finished in this department moves on to the next process or the next department. And that continues on as production occurs.